All right, y'all, back to work we go. You know, I couldn't stay away too long, right? Plus, we get some more money to make tomorrow, finish up the week with some more green. Now, wait till you all see these charts here tonight because we have 4 ranges on the tick charts right now. Now, that may not sound like a good thing, but if you know my style of trading, wait till you see how we string together this range strategy, because if we play this right on Friday, we're printing money to finish up the week on Friday, buy a nice big steak dinner this week in your favorite restaurant. So charts look fantastic right now. A very important video if you like making money, that is. Charts are ready. Enough of the intro. Let's dive right in and make some more moolah on what should be a fantastic Friday session. S&P SPY ready to go tonight. Nasdaq triple Qs are ready. I've got 5 clues on these charts telling me where I think the money is made tomorrow morning. The first clue, it's here in the hourly time frame. I like to use the hourly chart as an overall directional filter, and one obvious clue right now is the buyers are in full control of momentum. That is my directional clue, directional filter for tomorrow. Second clue on the calendar for tomorrow, there's 2 things I want you to be aware of for tomorrow. First things first, the government shutdown continues, and you see, right, all of these big events have been delayed here. So really the only news event we have all week is tomorrow morning at 10 o'clock Eastern time. That sentiment number for the consumers, that has been a very potent announcement lately. So be aware of that tomorrow at 10 o'clock Eastern time. Also to be aware, some bad news for next week. I'm off next week. Next week is the week before we kick off earnings. I'll be back on Monday, October the 20th. But I'm very confident, though, my students in the trade room, you guys have the tools, the tactics, the mindset you need to make money without me next week. So I will miss you all next week, but that's all right. I'll come back rested, refreshed, back on the 20th. No videos, no video newsletter posted next week, unfortunately. So consumer sentiment, 10 o'clock Eastern time. You've been warned about that volatility around 10 o'clock Eastern. That's clue number 2. Clue 3, 4, and 5 are down on our tick charts. We don't use time charts for entries, right? Time charts are good for direction, but entries, though, are better on the tick charts. Now, this is a 7,000 tick chart, by the way. All the time frames there, upper left-hand corner. And in case you're tuning in and watching for the first time right now, welcome to the channel. That is the 21 EMA. We don't need anything more than that to make consistent, repeatable profits. I see 4 ranges right now on this tick chart. First range, zoom all the way out. And what do you see right here on the bigger picture right now? Look at that. We go up, down, up, down. Yeah, what does it look like? That looks like one big trading range, doesn't it? Now look closer. Look closer. What do you see right now? The edges sold. The edges bought. The edges sold. I see you, Edge. I see you, Edge. 67.47 quarter. Do not forget that number for tomorrow and even into next week here. Remember, ranges, the money is made around the edges. And we'll talk about that edge game plan. That could be the most lucrative trade. Big winner coming tomorrow around that bear edge down below. That's one range, kind of a big weekly range. The second range you'll see right now is this bearish range right here. What does this look like? A slingshot reversal, right? It's a bullish market overall, a bear range here. And what do ranges do? They love to rotate. And because we're overall bullish, good chance here, it slingshots and takes out that high. Wait till you see the Nasdaq chart. The Nasdaq chart kicks this up even more. So we'll cover Nasdaq a bit later on. Next range, love this range right here. Bear move into a range. Remind me again, guys, what do breakouts do? They break out and they pull back. I see you 72. That will be a beautiful level for tomorrow. We'll talk about that in more detail in a moment. And then I would say probably last call for the bears, right? Last call for the bears. It's a bullish range. We break out lower, and that area right there, you'll notice this range right here, pendulum, that could be a formidable area of resistance right there as we rotate off that high, and who knows, that edge could be their target going lower here. So knowing these 4 ranges, that being a buyer as we go higher here. Now, I don't want to chase after it though, so let's talk about 4 different ways I'll be trying to time entries if we go higher. But my favorite trade for tomorrow, and really early next week, is that run lower into that edge. The Nasdaq has a beautiful example of this. We're going to cover that. I got 3, maybe 4 trades I'm watching for if we go lower. We're going to cover that a bit later on this video. Unless you hate money, do not watch the entire video tonight. Make sure you watch all the way to the end. Okay, let's go dive in now, going higher here. The most important thing that I want you to think about as we go higher here is I don't want to chase after it. Because as I go higher, now my risk-reward ratio really gets killed. So that's kind of the main thing right now. Now, as I'm going higher, there's a very simple sequence I'm looking for. First of all, I'm looking for separation off the moving average. If we separate away from the moving average, I can start taking nibbles right below the lows. I say nibbles because these are half-size trades for me, quarter-size trades. We know that whenever we see a range breakout, the breakout leg is always a measuring leg. So I will use that for a target, but obviously we know what the target is, right? It's back up to retest that big high. That's an easy bullseye. Now, this range becomes a breakout pullback. This range back here becomes a breakout pullback zone. The most important thing I want you to think about though is as we go higher, I want to buy low. And whenever we try to buy low, it's always a 2-legged pullback. 1 leg, 2 leg. Think about a measured move, and the best ones go a bit too far. And again, I'm going to warn you on this. It might be bigger. It might be 1 leg, 2 leg, and really go lower into that larger breakout pullback zone. So just be aware of that. Now, obviously, I have no crystal ball for tomorrow, but the formula is always the same. It's always a 2-legged pullback, ideally a bit more than a measured move. Then I'm going to try to use one of these ranges for a breakout pullback. And to do that, all we do is a bear trap right here. As it pulls back, bears once, bears twice. Remember, always a higher high, right? They pull back, bears once, bears twice, and then run back up again, right? So once we get those 2 tries here, now why are 2 tries so important? Good question, because now I know where your stops are. As my first coach always say, now I know where your pain is, right? And now I can buy right into all the bears, all their stops, and trigger those a short squeeze basically, right? So now, as we get that stop run going higher, then, very important, the same entry pattern where I'm taking nibbles over there, this is now where I'm adding to my winner. Remember, when you add to your winner, you always want to get separation off that moving average. A lot of examples of those inside the free video series, but separation be a technical bear trap like I teach in the free video series. It's a 2-try bear trap, 1, 2, squeeze stops and add to our winner. Targets are where? Back to retest the high, big all-time highs. Love, love, love that game plan for tomorrow. Now, let's face it. We may not get that big pullback. This thing may run and keep grinding. I want to talk about that game plan in 1 second. Before we do that though, let's pit stop for a second, because if you're watching for the first time right now, I know most of you guys watching right now, you guys know these patterns. You're making money with these already. But if you're watching for the first time right now, this might be a brand new strategy, a brand new language I'm speaking right now. Don't you worry though, I teach this entire roadmap. I teach all of these entry patterns in so much more detail in my free trading course. What I'll do is, guys, I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy you'll learn in that short video course will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. It is remarkably simple. More importantly though, let's face it, we make our money by timing good entries, don't we? So in that free video series, I'm going to teach you my 4 favorite entry setups so you can time better entries, get your confidence back in your trading. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're missing the best entries right now, if you've killed your confidence in your current strategy, what are you waiting for already? Hit that link that popped up there. Watch that free trading course. You're going to love all the trade examples examples I include in that short video series. I have hundreds of trade examples on the website. It's all 100% free for you. Also keep in mind too, guys, I'm going to put all the important links you'll need to learn this roadmap. Great for the new folks here watching right now. Start first with the free video course first. Most folks start making money all on their own with that free video series. I'll put that link below tonight's video. Don't forget too, we trade together every morning in our trade room, 8 o'clock Eastern time. I'll put that link below in the description below the video tonight. And if you're on Twitter or X as the kids call it these days, I post a ton of charts and videos and mindset stuff on my X channel during the day. If you're on the X platform, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more, I'll put below tonight's video description of this YouTube video. All right, so now you know where to go to learn more about this, because I get it. I look at things a bit differently here on this YouTube channel. So if you're here for the first time right now, that's what we want to go focus your attention on right now. Okay, where do we leave off here? Okay, I talked about going higher and buying that two-legged pullback off one of these ranges. I love that trade. But let's face it though, right? We may not get that. Tomorrow's a Friday. We get some big news tomorrow. Government shutdown continues, right? Okay, we may keep on going. Okay, if we break out and start grinding, going higher here, what'll happen is you'll get that pop up, that separation, but it won't pull back. It won't pull back and give us nibbles, right, as we go higher here. Now, a couple things we want to think about. Anytime we see a grinding market, in fact, write this down. Grinding markets are very difficult to stop. All right, they're very tough to stop. So if we see this thing begin to slowly grind, slow grinders, right? Slow grinders, we call this our grinding trend strategy in our trade room. Slow grinders, they're tough to stop. So I can be a little more aggressive on a slow grinder. Now, very simple, market trend line off the highs up here. Bring that trend line down around those lows. And here's where the magic happens now. Look left and find the lowest point, the swing lows here. Find those swings. And the goal is I want to buy the first test. We always say first test is the best test off the low of that channel. Now, I don't know which entry pattern we'll use on this, but I do know the best ones will always be below that prior swing. A lot of times what happens is it'll pull back nice and sharp, get below that 21 EMA. The bears will come in. And again, remember, it's a grinding trend, right? It's very strong, very difficult to stop a grinding trend. So this is not a good place to be selling, right? You're going all the way against that momentum there. So trap the bears in. Bad spot to be a seller, great spot for, you guessed it, a bear trap. I like to use those two try bear traps. I like to follow it up with we call a pullback combination. You'll learn this, again, you'll learn this technique in a lot more detail in the free video series, right? So two try bear trap, add-on trade. If we have space up here, maybe a strength trade, right? Again, if that terminology makes sense, the free video course teach you guys that stuff, but that will make sense though once you go through the video course, that trap, that pullback combination, and that add-on strength trade there. So that's a popping grind, right? That grinding trend strategy. Now, there's one more pattern I want to talk about going higher here. And again, we will cover the move going lower, right? We will cover that, because if not tomorrow, it will probably be at some point next week. I'll make sure you guys have a game plan for this. You'll want to save this video for next week if you don't get this game plan tomorrow morning. Now, another very common scenario, especially because we got that big consumer sentiment report tomorrow morning, we may pop up and go right into a new trading range, right? Now, again, I mentioned earlier that ranges, when I was a new trader, this is crazy, right? I used to skip range days. I know, right? Mind blow, right? When I was a new trader, I would avoid ranges. Well, yeah, now fast forward 15 plus years, I love range markets, because how do ranges work? They rotate, right? Once we see a ranges, they rotate, okay? They rotate. Okay, so if you understand that basic principle and you know that previous ranges love to break out pullback, if we go higher here tomorrow, this is the easier part, because now that previous range now is begging for a breakout pullback. And again, do not forget about that small range below. That little range right there is hiding in plain sight. And I'll tell you right now, the buyers will be drooling over that 72 quarter area. And we'll talk about this again in the Nasdaq. Nasdaq very similar there in the Nasdaq. People cover the Nasdaq here in a moment, but that's a great spot for us as well. So anyways, I want to get below that trading range. Remember, ranges love to rotate with symmetry, right? With symmetry. So we go below. Now we know where that kind of slingshot move is. Now, how do we time the entries on this? Because one thing about me is I'm not going to blindly buy this. Right? I don't know how far it will go. It may go all the way back to, I don't know, right? So I'm not going to blindly buy it. What we'll do though is we'll use that 21 EMA. And remember, there's a reason why I don't have any other moving averages on this chart. I don't want to know where it is. Ignorance is bliss. It is. I don't want to know where the fibs are. I don't want to know where the 50 is. I don't want to know. All I want to see is what I need to see, right? Believe me, if you're new to this stuff, ignorance really is bliss. Get all the stuff you don't need, get it off your chart, and just work that 21 EMA. Okay, now, bear trap here, right? Bears once, bears twice. Hopefully, it's off the range. Hopefully, it's off the breakout pullback zone. Trap those bears in, that 2-try bear trap, and then as we rotate running lower, remember this, if there's one scenario where you must add to your winner and you must leave a runner in a range market, because now we know where it's going. Now we know where it wants to go. So we add to our winner and we leave that runner, the pendulum swing, on the side of that trading range. It's a 2-try bear trap, it's an add-on, and it's a range rotation. Now remember this, one more thing here, then we'll cover NASDAQ here. One more thing here, remember, that knife cuts both ways, okay? This is where it gets fun actually, the more you know about this stuff. A range up here. What do you think? Is it possible we punch higher overnight, we hold the pendulum swing and go sideways, then what happens is we make a mad dash going higher at the open tomorrow morning? Okay, now, is that a good place to be a buyer? Yeah, probably not, right? Up at the all-time highs, that big range we saw earlier, right? Where the edge is, right? You know what I mean? So, okay, might keep going higher, but be aware of something like this. This could easily get kicked right back against us right now and give us a pendulum swing going lower. Now, I'm sure some folks are wondering right now, how would I sell something like this? Well, first of all, it'd be a half-size trade, quarter-size trade. Then it'll be a bull trap or a crown reversal. We let buyers trying once, buyers trying twice. The way in which we sell off the high into resistance, anticipating a range rotation, is always going to be this pattern, right? Or some variation of this pattern. It's a lower low in price, above that high, strong red candle now, the signal candle, below that 21 EMA. And again, for me personally, half-size trade, right? Quarter-size trade. These will not be as reliable as going with the overall trend. Makes sense, right? Okay, now, at this point, once we take that paycheck here at that low, now as everybody feels, because this will feel very bearish, right? This will feel like a reversal. But we know that we don't use the tick charts for direction. Okay, remember that. Very simple. The time chart, the hourly time frame, that's for direction. Okay, do not let the tick chart confuse you, right? This afternoon, that felt very bearish. All that was a rundown and a retest trade, right? If you watch our videos a lot, you know that trade a lot, right? That's a retest trade. But again, it feels very bearish if all you watch is this time frame. But again, we use the hourly chart for direction. So I'm going to warn you right now, as it goes lower, this will feel very bearish, which is good for us. Because now, as all the rookies who don't watch my videos, right, they're still learning MACD and RSI indicators right now, they get trapped in, and we can squeeze those stops running back higher again. Love, love, love that sequence for tomorrow. And if we're lucky, we'll get a pendulum swing, combine that with that trading range. I mean, come on, right? That is about as close to a guaranteed winner you're ever going to see. Mwah, love that trade for tomorrow. Okay, that's my vision as we go higher. Now, can we please cover the good stuff, right? The good stuff now is down at those edge lows. Let's do that right now over on the Nasdaq. Nasdaq's getting a bit squirrely over here, getting lonely over here. Okay, on the hourly time frame, pretty clear right now, we're bullish overall, right? Pretty bullish there overall. And you'll notice right away, look at the range right here. Look at the range right here. That range right there. Where's that range want to go? Where's that range want to go? Well, look back here. Look at this range over here. Where did that range want to go? That's a range, right? It's a range. It is. Where'd it go? It rotates. Surely that must be a coincidence, huh? Yeah, of course it's No, of course it's not a coincidence. It's a range rotation. So now we know right there, right? That range right there, you know where it wants to go now, right? You know where it wants to go. You know that 493 and a quarter, give or take there, up top there. The most important thing right now, though, is direction. We know we're bullish overall. Do not confuse that if we see, for example, breakout leg, measured leg, that breakout pullback. Do not let another leg going lower here. Do not let that fool you. It's still a very bullish market overall. Now, before we talk tick charts and the Nasdaq, I want to share something with you all I've been working on all year this year. I'm very excited about. We all know that AI is the technology of the future, right? And I recently built an AI tool that gives me an advantage over every other trader on the planet. I use this AI tool in my trading, in my personal life, and I'm completely addicted to using it each day. So if you're like me and want to find ways to leverage AI in your trading and your personal life, I will drop a link down below, or just scan that QR code with your iPhone and try my new AI productivity tool called VoiceTap. But I'm going to warn you though for a second. Once you start using VoiceTap, you will never want to stop. So again, use that link below or scan that QR code for a free download on the App Store and let me know what you think. I would really value your honest feedback. Now, let's dive in and talk about the Nasdaq here. All the Nasdaq tick charts right now. Again, tick charts are better for entry timing than time charts here. Look at the ranges we're seeing here right now. Now, first of all, look a bit wider. Look wider. I said earlier, remember, this may not happen tomorrow. This may not be tomorrow, but that range down there, does that look lonely to you? It does, right? Come back and see me. Come back. You know, you've been warned here. 092, 061. That will be a trade you will regret missing. May not be tomorrow, but keep on your radar for Monday, Tuesday. It's almost a guarantee this will come back. It's not an if, it's always a when. It will come back to those breakout pullback zones eventually. That's one big range I'm watching down below, and the breakout pullback zone. Then there are three more ranges you can see, and now you're warmed up on the S&P chart. Now you know what I'm talking about here. Okay, one range, that range right there. Right? What does that range tell us? That's a slingshot move, right? It's a bear range in a bull market. So it rotates off that low to complete that pendulum swing going higher here. Another range, that beauty right there. These small ranges, they love to fool us, right? Breakout pullback off that area and that range right there. Again, calling all bears. Last chance right here. If they can't stop this area, you know where we're going, right? We're going right back to take out the all-time high, because what's there? Strong move, right? Remember, anytime we see a strong move higher, a pullback and a bullseye at the high. Anytime we see a strong move lower, we pull back, bullseye. Bears once, bears twice, retest trade, right? I know a lot of you guys love these retest trades like I do. Retest trade, double bottom retest trade there. Beautiful one this afternoon. We talked earlier on the S&P. You know the game plan, right? The game plan is we're taking nibbles, right? Nibbles here, small positions, nibbles below these lows, right? We know then two-legged pullback off the top of that range. Okay, same stuff there. If it pops up and starts grinding, we don't chase it from the channel, off that high, off that low, look left, love that trade. And if we're lucky tomorrow, it'll pop up into a trading range, and we can then use this range for rotation. We can use that range for a breakout pullback, or that range for a breakout pullback. And again, we can always use that pendulum swing as we go back and forth there, right? Okay, same basic stuff we had earlier here on the S&P. Now, at this point, tomorrow, if we see another strong shot going lower, again, it will feel very bearish down here. Do not let that fool you. It takes a lot more than that on the hourly time frame to flip this thing into a bear market. The goal will be is that once we get back below that low, and really when you think about it too, it could easily be a pendulum swing off the high, off the low there, right? That pendulum will make a lot of sense there. So we'll keep an eye out for that tomorrow. If it ran up and then got crushed back down again, that pendulum swing technique would really be very helpful to give us more confidence at that low. But if we go lower here, remember, it's always that bear trap and that add-on, right? Let them pull back. Bears try once, bears try twice. Squeeze those stops and run that sucker back up again. This trading range is going to want to rotate back up again, right? So as it rotates, what do? No, you don't go bask in your own glory, start counting your chips already. You add to your winner. You add to your winner. You take half off at the first target, get that stop up to point of entry. Don't let a winner turn against you, but you reallocate those chips, put those chips back in the table. If you start seeing what? That separation off that moving average, right? Separation means strength. 2 try bear trap, add on, let that trade run as it rotates going higher. Also, don't forget too, we oftentimes don't get that bear trap down there. We may get crushed lower tomorrow on that sentiment number we have tomorrow at 10 o'clock Eastern time. We may not get a bear trap down there. It may not bear trap back up again. It may just whoop and run right back up again because there's so many buyers who are drooling over that breakout pullback zone. If it V bottoms off the low, remember, V bottoms almost always begin to grind. What do grinders tell us? Strength, right? Strength. So what we do is trend line off the highs, channel off the lows. We look left, and what we do, we don't miss that first test is the best test. It could be a bear trap. It could be a pullback combination, a strength trade if we're lucky, right? Any of the setups you guys are learning inside that free video course. And also, too, be aware, too, like we saw today, anytime we see a strong move down, be prepared for the retest. Bears once, bears twice. These retest trades, I have students in the trade room who only take these retest trades. They're one of the most lucrative we get. You can see right now, things popping up, going higher here. So remember, if it runs going lower, we oftentimes will get a 1-2 try failure, 2 try bear trap. We'll oftentimes pop up, we'll get our winning trade on this, but it rolls over. It takes out that retest of that low. And again, this will feel very scary. It will feel very scary. I'm gonna tell you right now, the biggest money you're ever gonna make is when you're uncomfortable. The more mental pain we can tolerate, the better we get paid for this. So on the retest, like we saw today, right? It retests that low. The key is the higher high, right? The key is the higher high. Higher high in price. Trap those bears in. Now I know where their stops are. Now I know where sellers become buyers here now. Now I know where I short squeeze triggers. And again, if you learn one thing from me, after these bear traps get you paid, take some of that profit, add it right back on those add-on trades going higher there, right? Love that one. Get underneath those lows. Anywhere under those lows here on the S&P and Nasdaq, bear trap, retest trade, add-on trade, let that sucker run. All right, guys, I'm getting goosebumps to talk about this stuff, getting ready for tomorrow. Our charts are prepped. Our mindsets are prepped. Hopefully yours is prepped as well. And hopefully you'll use this game plan to make a killing on Friday morning. Now, speaking of Friday morning, don't forget, guys, the place to be, the trade room, every morning, 8 o'clock Eastern time. I'll put all the important links you guys need to learn this roadmap. Definitely start first on that free video series. You're going to love that free video course. Folks, love. They got a lot of great feedback from you guys each week on that. So start first on the free video classes. You're going to love the trade examples there. Then come join us in the trade room, and we'll do it together. In the meantime, guys, be well out there. Be nice to will you. I will miss you next week. Keep in touch. Back in the 20th. In the meantime, guys, adios, amigos. Bye for now.